Good morning, everyone. Brecher's pre-market video for August 29th. What's this about? Last night, Waller talking, Trump appointee, very much a dove, talking about he's so worried about jobs. And I'm telling you right now, I know you think the Fed might cut, no doubt about it. But to me, it's all about the buybacks. And I'm telling you right now, if the jobs are that weak, you're finally going to get companies worried about buying back their stock. And I'm telling you, you could see it in this. Let me just show you. This is the actual 10Q from Marriott. And watch what happens in here. Sorry, I did a little funky. And what are you going to notice? If you go and put this in here nice and big, you're going to see April 1st to April 25th, they bought more stock than May 1st to May 31st. Yeah, when the market was getting nailed, they were buying back stock. This is from Marriott's actual 10Q. Fascinating. So just want to show you in there. So what happened April 1st, April 25th? Well, you go into Marriott and it acted much better than May 1st to June 30th. So buybacks do matter. Look where they bought more stock, 223. Well, look where they bought less, 266. So when they started thinking the tariffs weren't going to be a big deal, they were buying stock. So I just want to let you know that. So this Waller comments can affect the market later. Now you might say, well, why today would the bond market be down on those comments? So you could say the PCE. I'm telling you right now, I don't even look at the PCE at the moment because it's backward looking, but I thought it would be basically people are already factoring in it wasn't going to be an event. And I'll show you why. We've been calling this beautifully for a long, long, long time. And we're talking about the DBA or the DBC. I'll show you what we're talking about. So here is the commodity index. As you see, it's near its high for the year. So how about the commodity index that includes oil? You'll see that that's not there yet. I look more at the one that's the agriculture because that's what hits most people. So, and I'm just telling you, it's sort of muted the last month, and the PCE was sort of muted. But coming forward, we know the tariffs are raising prices. Now, why would the bond market be down today? Because if they cut short-term rates, it's actually inflationary. If they're obsessed with jobs and they cut rates, it's inflationary. You could get that stagflation stuff. So I just want you to know that of what I'm watching in there. Now, what else am I watching? Well, I'm watching that you're getting near the buyback blackout time. It starts with JP Morgan in earnest. You'll see in here that most of the time it starts getting funky when they have their buyback blackout. Maximum. Maximum. Yeah, maximum. So you'll see, not every time. It doesn't mean it's a holy grail. Nothing's a holy grail. But I just thought I'd show you that. The other thing I thought I'd show you is about cycles. Can cycles help? Yeah, but it's just the same thing. Holy grail. I just don't look at that stuff. I do look at it in the background, but I don't act on it. My number one thing is buybacks and trend lines and definable patterns. And I'll show you what we're talking about. I can go into the SPX and show you 8 million cycles and try to fit them. What I've seen work is the more things that are followed, the more important. Go take Carolyn, a friend of mine, the Fib Queen, and look what she did with the 1272 extension from here. Yeah, it's up here. Do you think there are a lot of funds that follow her? Sure, there are. It becomes a self-fulfilling prophecy. So that is a big deal as long as you combine it with things. I can't stress that enough because 1272 from here, well, it went to here, but guess what you could do? Define trend line. That's why we got bearish here. The more points of contact, the more important. So another fallacy. I'm telling you, there are a lot of fallacies, and I'm going to do a video on it. But the idea of a rising wedge, well, how do you draw it? I'm telling you, I've seen more people lose their butt by rising wedges of thinking rising wedges work. It's never the rising wedge. It's the break in how the oversold condition is worked off. If an oversold condition is worked off by retaining a bearish structure like here, yeah, it matters. So I'm just telling you, I wouldn't look at the cycles. I would look at the buyback cycles and maximum buybacks coming in the middle of October. That's why you see so many dives in the market in October. So it's because of lack of buybacks. And this time, companies have accelerated their buybacks up to 1.1 trillion this year. But in that time, between September 8th, when it becomes a buyback blackout for JP Morgan, and November 2nd, when by then a preponderance have already reported earnings, you see some good dives. And I think you'll see it this year. A lot of times, the divergences you see, whether it's the bonds, whether it's the dollar, whether it's worried about some kind of economic news, they don't come to roost until the blackout time. Now, the thing with Waller, I think, is going to be a big deal as well, because companies, it's all about confidence. They're going to buy more stock if they're confident. So I think him saying the jobs report is a big deal coming up in September, I think you're going to see lack of buybacks into that. So we'll probably see some weakness. That's what I'm going to go on. You can go back to 8 million cycles here. See anything here? A trend line. Heck, maybe it's a cycle low. How about here? Maybe it's a cycle high. Combine it with other factors. We found 3 reasons to do a trade. At least it gives us justification if we have a hedge fund manager or your significant other breathing down your neck asking why the hell you're doing a trade. Try to have at least 3 reasons. Have a great rest of your day. Have a good long weekend. Talk to you next week.